Hello, hope you are doing well. I now welcome you to the pre-scene analysis for the May 2021 and August 2021 operational case study exam. Now, this pre-scene analysis has been created by us in a very detailed, in a very specific, and in a very informative way. While you go through the pre-scene with us, we will be pointing out the important aspects of the company. We will be pointing out the E1, P1, and F1 relevant syllabus areas. We will be giving you hints, tips, and tricks as to how you can use this material when you are writing a mock exam question. So, each and everything about the pre scene is done by us in a very, very detailed way. This is going to be the first part of the pre-scene analysis, and the entire pre-scene that we have created is about 2 hours and 2 hours 15 minutes. But the first part is what we will be focusing on today. Now, before we start the pre-scene analysis, we always ask our students to first go through the industry analysis. Now, the industry analysis is a completely different and specific document that is created by us, and there is a video recording for that as well. But we first ask you to go through the industry analysis because it acts as a bridge between knowing nothing to knowing what the industry in the real world is like. So when you start with the pre-scene analysis, you already have good ideas in your mind. So first we do the industry analysis to gain a little bit of understanding of what the pre-scene company's world is like in the real world. So the real world industry analysis, what we do first. Then we recommend you to start with the pre-scene analysis so you have ready points, ready ideas in your mind. And for this reason, we have created a free operational case study exam mini course. Now, I will leave the description of the mini course. I will leave the link of the mini course in the description below. All you got to do is find the link in the description, click on it, and register for the mini course. The mini course gives you a lot of informative material. It gives you the industry analysis, gives you important E1 notes, gives you important mind maps, revision notes that we have created. It introduces you to the I can statements, the blueprints areas, and most importantly, it gives you a structure to follow. Everything about the exam is introduced in the mini course. So you can view this pre-scene analysis with me with more information, with more points in your mind if you have done the mini course first. So if you haven't registered for the mini course yet, try it now. It's absolutely free. You will find the link for the mini course in the description below. So my name is Devansh, and I will be leading your operational case study exam discussions. So my job is to create a framework, create material that really helps you understand what the company is, how can we use it, make the pre-scene interactive, make the pre-scene, more approachable. So material that has been presented in a difficult way is made easier by us. What we try to do is give you the best chance of retaining the material. That is why I create very, very unique explanations. I create unique diagrams. I create unique, just text boxes that will help you focus on the important stuff. And that creates an image in your mind that you can bring up and remember easily. So I will show you how to flexibly manage your time as we move forward in the course while you are studying, provide you a framework that helps you focus on the important areas because everything is out there. But we do it in a better way, in a more personalized way, and in a more student friendly way. And that is why we get our high pass rates. So I felt I just needed to do a small introduction. We have been tutoring for a long time now. Specifically, a lot of experience and a lot of time goes into this pre-scene analysis, and I'm sure you will find it helpful as we move on. So without wasting any time, let's begin with our pre-scene analysis, part 1. So the first part we speak about is job and role outline. So before we actually get into what the company is, we need to know what is my role, right? I have explained this in the introduction of my operational case study. So if you viewed it, you'll already know what the role of a finance officer is. But if not, here it is. So you are a finance officer for Acellerate, a car rental company. So the company that we are working for is a car rental company. Now bring up all your industry knowledge, industry, just tips that we gave you as part of the industry analysis that we have done, and see how handy it's going to be, because you've already have a strong background about what this industry is like. That is why we recommend to do the industry analysis first. So you are a finance officer for Accelerate, a car rental company. So what is the role of a finance officer? Now in the CIMA exam, the role of a finance officer is more short term, is focusing on short term decisions, on costing, on budgets, on variance analysis, working capital management, cash management, risk management in the short term. All of these jobs are synonymous with the role of a finance officer. So, and all of these jobs, if you look at them, coincide with your E1, P1, and F1 syllabus. So, just to point out, these are the major roles of a finance officer. Your main role is to support Ethan Tennant, the finance manager. So, you will be working with Ethan Tennant. He's your finance manager. You directly report to him. Your tasks include preparation of the annual budget, producing the management accounts, and providing information that is required. Now, all of this, which is budgeting, management accounting, some parts of costing, information, are part of your P1 syllabus. So, see, as we go into the pre scene, as we keep discussing the pre scene, we will highlight important syllabus areas for you. Next, you also assist with the preparation of financial statements and deal with queries regarding financial reporting. This is directly related to your F1 syllabus, and our F1 notes, P1 notes, and the revision course can be used to really get your base strong. Because if you have a good base of knowledge, which is knowing what costing techniques are, budgeting techniques are, cash management techniques, working capital techniques, you can really write a very well informed answer when we go to mock exam writing. Moving on, we go to company information. So now talking about our company. So company background. The company Accelerate is a leading car rental company based in Everland in Western Europe. So first and foremost, you are a leading car rental company. You are one of the market leaders in that particular segment, and you are located in Western Europe. Now, Accelerate is located in a developed economy, because Western Europe, Europe as a continent, is said to be a developed country or a developed continent. And so it opens up advantages such as better infrastructure, highly skilled workforce. In parts of Western Europe, there are lots and lots of good infrastructure examples, highly skilled workforce examples. Customers have the money, have the spending power. Whereas you also need to take into account the higher regulation, the higher factors of production costs, like labor, like other employment laws. All of that is going to be strict and is going to cost you money. So you being in a developed country is advantageous to you, because customers are educated, they are ready to spend that money for your car rental service. On the other hand, you will pay more for employees, you will pay more for management, you will pay more for labor. So keep this in mind. And this tells us that the demand conditions of the Porter's diamond are strong. What does demand conditions mean? Demand conditions clearly points out to the importance of customers in this particular segment. So Everland is a highly developed economy, which means people have the interest and the money to spend on such services. Also, the government will have infrastructure in place to promote such markets. So demand is going to be strong, and hence there is need for car rental companies. That is good for you, that is good for your business as Accelerate. So keep this in mind. See how we are giving you points, see how we create this for you in a very informative way, in a very easy to remember way, so you can keep these points in your mind whenever you are thinking about Accelerate. Think that okay, we are in a developed country, so demand conditions are going to be strong. Also, they tell us that Everland has a population of 72 million and its currency is e-dollars. So whenever you are writing something as part of your mock answers, remember to write e-dollars and not only the dollar sign. A very small, just an important fact that I wanted to share. But one important thing that we need to look over here is that the population is 72 million. So if the population is 72 million and the demand conditions are strong, isn't it a good scenario for you as a car rental company? Definitely is. So we are also one of the leading car rental companies. You're the market leader. That's your competitive advantage. You can keep that in mind as well. Moving on, in the financial year 31st December 2020, the company reported sales revenue of 206.3 million, a decrease of 25% from the previous year, which means in your current year ended 2020, your earnings, your revenue was 25% less than the previous year. A worrying sign, something that we must think about, something that we must keep in our mind. It incurred a loss before tax of 0.8 million compared to a profit before tax of 11 million in 2019. So in 2019, you had made a profit on which you paid your tax. In 2020, you made a loss of 0.8 million. Now, obviously, you can't pay tax if your company is in a loss, but it's a worrying sign. So please make sure you keep these numbers in your mind. Make sure to just keep your these important facts in your mind, that your company, in spite of being the market leader, has faced huge declines in this current year. So we'll go into the details of the financial analysis once we get to the later part of the pre-scene. But these numbers are important to know. So you can quickly remember that, okay, I had a loss of 0.8 million, which is not good for my company. And we must look at developing new revenue streams. We must reinvent our business to make sure that we are profitable as we move forward. So, see how ideas are coming to my mind when I see these numbers? I want you to develop that sort of thinking as well. Now, you don't have to particularly remember this. I always ask everybody to keep going through this recording, to keep going through our PDF file, keep reading it regularly. So, you'll automatically have these numbers in your mind because of how we have created this document. Let's move on. The reduction in revenue and the pre-tax loss arose as a result of a global economic recession which impacted the business throughout most of 2020. So when we started the pre-scene, when we started the industry analysis, there was a note given by CIMA which said that it's best to assume that nothing like the COVID-19 pandemic really existed when this pre-scene was created. So if you make a relevant argument, marks will be given, but otherwise it's always best for students to assume that nothing like the pandemic existed and use the information that has been given to us in the pre-scene itself. So over here they are clearly telling us that this downturn was because of an economic recession. They've not told us the reason for this economic recession. We work with the information that they've given us. They've told us that this particular downturn was specifically because of an economic recession. So keep this in mind. Now, a global recession indicates the risk of macro environmental factors affecting this industry. Our business must look at risk management and alternative measures of risk diversification, because if a global recession can hamper my business so much, can have a 25% decrease in my revenues, then it is important that I look at different revenue streams, that I look at diversification, I look at different offerings, because we have survived this particular recession. What if we don't survive the next one? Because every company has a risk taking appetite, every company has a loss appetite. So something that you must have in your mind, new opportunities, new innovations must be something that we are really on the lookout for, to reinvent ourselves, to bring ourselves back. The company was formed in 2002 by Joseph Waller, the current managing director. So we know that it was founded in 2002, which means you have been in business for roughly 18 to 19 years. A business can only survive for so long because it has garnered a set of customers, a loyal set of customers. People like its service. Because have you seen any business in the world which exists for roughly 19, 20 years and does not have, a good review, does not have a good set of customers? Yes, there will be some negative reviews, there will be some negative experiences, but overall, companies only exist for a long period of time if people like their products. So that's a good thing for us. We might have garnered goodwill, we might have garnered some reputation, which is important for our business. The company's development was initially slow as it faced severe competition from global car rental brands. We already know this from the industry analysis, that major worldwide players enter markets by buying out their competition and then offering a very cheap service, then offering very efficient service. So competition is severe. Next, however, between 2010 and 19, it grew rapidly, exploiting its homegrown credentials and commitment to quality customer service. So these are our major competitive advantages. We never compromise on these two qualities, being homegrown and commitment to customer service. So remember, these are two key points which we must never compensate on and try to always leverage, try to always make better. The company operating under the Acellerate brand provides a high quality car rental service. So you provide a high quality car rental service, which means your prices will be a little bit higher than the conventional car rental service, because high quality is has certain costs that will indirectly increase the price of the product. So high quality is being given, but your cost will be a little bit higher, your price will be a little bit higher than your competitors. Next, they say that it mainly services the business and premium leisure segments of the travel industry. So we are focusing on two main segments, the business segment and the premium leisure segments. So from our industry analysis, we know that the business segment is also called the executive segment. It is anticipated to exhibit the fastest growth over the coming years. The rising number of business travelers across the globe, especially in developing countries, is a prominent factor in accelerating this segment. So, in our country, in our Western Europe segment, business tourism or business travel is already at its mature stage. But in other particular fast growing countries, in developing countries, this is a segment that we can look at. So this is an expansion opportunity for us, just a food for thought situation, just a cloud of thought that you can develop over here. Yes, it is a major segment in your country as well, but there is an opportunity that we just discussed. So, from our industry analysis, we also know that the luxury segment is picking up pace in emerging countries, as well as it has reached maturity in developed countries. So, you will have good customers in the luxury segment in your country Everland. You will have business customers in your country Everland. But if you're looking at for exponential growth, if you're looking at first to market opportunities, then it's got to be an expansion strategy that you particularly look at. So see, a light bulb goes off in our mind with an opportunity. The economy segment, if you've gone through the industry analysis, the small cars economy segment dominated the market in 2018 to 20 with over 30% of the revenue share. And we are not offering any economy services. Why is that? Could this be an opportunity for us in Everland itself to start offering economy cars? It's an opportunity, right? Since our revenues are falling and recession has hit the global economy, offering economic options could be a step to diversifying our product line while also opening up our entry into a hugely popular market segment. So, an opportunity for us, maybe under a new brand name, offer your economy segment, or under the same brand name, start offering economy segment rentals. It's a definite opportunity that we must look at. Keep this in mind. I hope by now you have like a piece of paper or a Word file open where you are writing down small points, where you are writing down small ideas which I'm giving you. Most of it is already there in this PDF file or on the screen that you're seeing, but it's always best to have your own ideas written down in one place so you remember it better. Now, the company operates a number of sales locations throughout Everland. The sales locations are situated at or close to airports and in some of airport sites as well. Each sales location is supported by a car maintenance center as well. So every location that you have has a maintenance center that is attached. A single maintenance center may support more than one sales location. So one maintenance center can be for more than one sales location. Some of the sales locations and maintenance center properties are owned by the company, whilst others are leased. So, this is an important syllabus area that we must focus on. Since we own some sales locations and maintenance center properties, your F1 syllabus revolving around the IAS 16 property, plant, and equipment, the revaluation entries, the disposal of assets, the impairment of assets becomes an important concept for us to clearly know. Same way, they say that some are leased as well. So, because the topic of leases coming here, IAS 16, which deals with everything about the leases concept, becomes a very important syllabus area because questions can revolve around this. They'll tell you that we have taken a new sales location on lease. How will we account for it? So, you will have to explain that. And for that, you need strong F1 knowledge, which again, our F1 notes and F1 revision course will help you with. In response to the reduced demand because of the economic recession, and in an effort to lower costs, the number of sales location was cut from 155 to 117. So you reduced your sales locations to reduce your cost because revenue was going down. There were not so many customers who were renting cars because of this global recession that is spoken about. The main closures were in off airport sites. So your locations, your sales centers in and around airports were where the main closures were. Accelerate, however, continues to operate car rental sales locations as most of the airports and largest cities in Everland. So we still have good presence. Maintenance centers were also closed in 2020 where the sales locations were closed. So if a sales location was closed near a maintenance center, that maintenance center was also closed. So keep this information in mind. See how we are making it so simple, so informative for you. That is what is important and that sticks with a student. Moving on, they've given us some very interesting information. The company's rental fleet consists of a mixture of company owned cars and cars subject to repurchase agreements. We'll talk about this in a whole lot of detail as we move forward. But as of now, you are to know that we have two types of cars, one which we own, and second, which are repurchased agreements, which means you have purchased them, but the company that you purchased it from will purchase it back from you. So there are two types. Under a repurchase agreement, the manufacturers agree to repurchase the car at a specified price subject to the condition, mileage, and holding periods. So it will be repurchased by the particular manufacturer. Typically, the holding period is 12 months. So you hold it for 12 months, you use it for 12 months, and depending on the conditions, the manufacturer will buy it again from you after these 12 months. The fleet was reduced during 2020 by a mixture of disposals and non replacement when the car repurchase agreement expired. Why? Because there has been a global depression, there has been a global recession, because of which your revenues have been significantly affected. So you decided to reduce your sales centers, your maintenance centers, and your fleet as well. And how was the fleet reduced? You sold some cars, and others, once they were repurchased, you didn't buy any other repurchase agreement cars. So, two ways you reduced your fleet. It currently has a fleet of 15,000 cars, down 4,995 from the previous year. So, previous year you had 4,995 more cars than you do right now. So, it has been significantly downsized. In normal trading conditions, the size of the fleet will vary throughout the year depending on the season. In normal conditions, the size of the fleet has to vary, which means in summers you might have more cars, in winters you dispose of some cars. Why? Because this industry is significantly affected by seasonal factors. So if seasonal factors are being discussed over here, then your concept of the time series analysis, which is part of your P1 syllabus, becomes very, very important here. So seasonal factors are important, and hence time series analysis will be a concept that you must clearly know. The demand for car rental is at its highest during summer months because everybody is traveling. There are more travelers who want to rent cars. The actions taken by the company in 2020, such as reducing the fleet size and closing some sales locations and maintenance centers, have proved to be effective in enabling the company to survive the worst effect of the recession, which means the decisions that you took have proved effective. So your board of directors has done a good job in making these decisions to make sure that you are able to survive this recession. Because if the board would not have done anything, they would have tried to ride out the storm, maybe your company would not have survived. So this is important. This is your competitive advantage, that the board is well experienced, has taken good judgments. In addition, the failure of some companies operating in the market has provided opportunities for Accelerate. So some companies failed and could not ride out the recession. You did. So you can now capture the additional market once the situation becomes better. So this is an opportunity that comes to our mind over here. Keep this in mind. Moving on, financial performance for the first quarter of 2021 was in line with the budget, and the senior management team believes that the company is now in a solid position for future development. The worst is behind us. Your first quarter performance was good, in line with what was projected, and moving forward, you have a solid background. So keep this in mind. Next, we speak about what are our services. Now, the company provides car rental services throughout Everland. Customers normally rent a car for 1 day or for a period of up to 1 month. So, your major job is car rental in Everland only. The average daily fee for the car rental varies depending on the length of the rental period and the size and the type of the car hired. Very normal. This is what happens. The company's rental fleet includes a wide variety of types of cars in different sizes from a range of manufacturers. So, good option is given to the customer. The fleet includes cars with manual and automatic transmission. Over here, fleet management and maintenance will be a major competitive advantage for this industry. If we can get fleet management right, if we can get regular maintenance and upkeep right, it's going to be a major competitive advantage for us. So these are key factors which we must get correct, or which we must do very well. Moving forward, we will learn that our fleet management system is very good. So details on that are coming up later, but keep this in mind that fleet management is a key issue for us. The fleet cars are mainly diesel and petrol powered. But there are also a small number of electric cars. So, a new but upcoming market segment is electric cars. It is arguably cheaper in maintenance for the operator, which is Acellerate, and for the customer as well, because the customer has nothing to worry about in terms of petrol and diesel mileage. This area can be seen as a big growth opportunity by us. Additionally, we have a number of prestige cars which are expected to appeal to the business market or to leisure customers who are looking for a bit of indulgence on their vacation. So, this is a specific and a focused market that we are looking at, which is the prestige cars market. The average monthly car rental fleet size typically peaks in the summer months. As we know, seasonal factors are a big characteristic of this industry. The car rental fee includes basic insurance. So, the minimal basic insurance that is required by law is included. So, risk management will become a big key concern here, because if your insurance does not cover a particular issue where your car is damaged or the customer damages your car, and there is no way you can get that reimbursement or get that insurance approved, that's going to be a problem. So, robust insurance, a robust risk management system is going to be a key concern over here. The car will have a full tank of fuel on collection, and customers are expected to return the car with a full tank. So, normal general standard. In the event that the car is returned without a full tank, the customer will be charged for the shortfall. Customers can book the car rental online direct via the company's website or an app, which clearly tells you that you have a well maintained website and an app. So, website and app management is key for any modern business and adds to your competitive advantage. The easier your app is, the easier your website is, the more people are indulged, the more easily they can book. So, this brings in your E1 syllabus of app management, digital costing, big data, data analytics. All of these become a possibility because of us having our own website, having our own app. Alternatively, the customer can book at the sales location on arrival as well, normal and standard practice. Such customers run the risk, especially at busy times, that the sales location will have no cars available. So, incentives to our customers to use the app and website to book in advance can be looked at. So, we can manage our capacity effectively. So, don't encourage customers or to book at a sales location. Rather, encourage them to book in advance by promotional offers or whatever. In addition, car rental can be booked via third parties as well, which means hotels, airlines, and other third party brokers. And Accelerate pays a commission on all rentals booked through the third parties. Again, diverting customers to your app, to your website, to directly booking with you can be more advantageous. But in the real world, you do need third party help as well to increase your revenue, increase your sales. We have additional rental services as well, which means the long term car rental. Now, the company offers long term car hire of periods between 1 month and 3 months as well. So, you have that option as well. The rental is charged at a fixed fee per month and includes an enhanced level of insurance cover and free additional drivers. You have deliver and collect as well. So, on payment of an additional fee, the rental car will be delivered at the start of the rental period and will be collected at the end of the rental period. These are standard services which everyone must offer. These are, we can say, threshold services. Everybody generally offers these in a normal car rental environment. There is a one way rental as well, which means this service allows customers to collect the car from one location and return it to another location and pay an additional fee. Next part further details our services, which are the ancillary products and services. Now, in addition to revenue generated from car rentals and the additional services detailed above, the company generates revenue from customers through the sales and or rental of optional ancillary products. So you give them extra products, extra services, and charge for that. First is collision and loss damage waivers. under which Accelerate agrees to relieve a customer from financial responsibility arising from car damage incurred during their rental. So you'll charge them extra, but give them a full cover, give them a detailed, an extensive insurance that covers their collision and damage waivers. One extra service. Next, you can have supplementary liability insurance or personal accident insurance products, which provide customers with additional protection for personal or third party losses that you incur. So you have collision and loss damage waivers, you have additional and supplementary insurance, you have products for driving convenience such as child safety seats, your road assistance, portable navigation units. You charge for this, but you give them an extra service. So an ancillary product is a product that is acquired as a bonus or add-on purchase when buying another product. When you're taking the car on rent, you take this as an add-on, as an extra. This type of product is often offered as a bonus instead of reducing prices or offering discounts. So, what you can sometimes do is rather than charging extra for it, you include it in the price of the car, but don't reduce the price of the rental, don't reduce the price of the car. So, indirectly, you are charging for it, but the customer feels that he is getting something extra. So, keep this in mind. These are ancillary services which you offer. Moving on to a very important part, which is our company's strategy. Now, the company aims to grow the business through both the development of new markets and expansion of services. So, you want to expand geographically, plus, you want to expand your services. So, whenever you are suggesting any strategic direction, whenever you are suggesting anything, in terms of expansion, keep this in mind that these are our major aims. Keep this in mind that your company is looking for new markets, your company is looking for new services. How can you offer it? Keep this in mind. The main objective is to continue to improve our margins by utilizing digital technologies. So, the company, the board of directors have identified that digital technologies are key. This is your comparative advantage. They are not using old fashioned methods. They are agreeing that, okay, digital technologies are really important in today's modern world. So, that is a very key factor for our company. So, how are we going to use digital technologies to improve our car utilization, to improve methods of disposing car using online, direct customer, direct dealer channels, finding the best price, achieve fleet cost efficiencies through planning initiatives, and control the costs and increase efficiencies through process improvements, through improvements in your rental process. Now, digital focus and commitment is shown by this company and adds to your comparative advantage. Again, this brings your E1 syllabus, digital costing, big data, digital cost control, intranet system, data analysis. All of this becomes a very realistic possibility as a question in your exam, and hence you should have good knowledge, good background about the same. Moving forward, they have told us about the people of this organization. Now, the company currently employs 885 staff. Most of the staff are employed at the sales locations and the maintenance centers, and the remainder at the head office, which is 134 people at the head office. Now, my question is, I'm thinking 134 people to manage the most important functions of the organization, because the head office controls everything, right? The head office makes all the planning, the strategy, the budgets, the direction, and all of that. So 134 people at the head office to deal with all of these important functions. Is it going to be enough for a company that wants to always look to innovation, always look to going one step further, always look to expansion? It could be, but it raises a question in my mind. So the breakup of the head office function is not given here. So I assume that IT, HR, finance, accounting, marketing, sales, everything falls under the head office. Now, IT is very growing in the digital world. We have our own app, we have our own website. So, continuous development of the same, we'll need people for that. And we have a huge number of customers to deal with. Next, innovative marketing and sales techniques are also something that is coming up every day. So we'll need people for that as well. If people are under unrealistic pressure, then they won't be able to work to their best ability. Same way, HR is one of the most important functions in any organization. If there are let's say you require 20 IT staff but there are only 10, then it's going to be an unrealistic pressure for them. They won't be able to work, they won't be motivated. So an issue to keep in mind. Also, the finance function, which is ever evolving. Every day something new comes up in the finance function. Every day a new digital possibility comes up in the finance function. So, if all of these four functions are part of the head office, is it going to be enough for a big company like ours going forward? I understand that it might have been some cost reductions by making staff redundant in this recession period. But as we keep growing, as we keep moving forward, is this something that we look at as a particular area that we need to focus upon, that we need to reorganize or look at? Something to keep in mind. It's a cloud of thought that you must have at the back of your mind. Next, we move on to a very, very important part, which is the directors. So, they have told us what each director is good at, what the role of each director is in our organization, and we treat it as something which is very important. Because when you are writing an answer, when you go on to mock answer writing with us, we'll tell you how director competencies, how director skills can be used in your answer. For a very simple example, let's first talk about our managing director, Joseph Waller. Now, Joseph is responsible for the company's strategy. He worked for a competitor company before founding Acellerate in 2002. Joseph is keen to continue to expand the business through the exploitation of digital technologies. He wants to ensure that an appropriate infrastructure is in place to support future expansion. So now, whenever you are doing a mock question with us that talks about expansion, that talks about digital technologies, you can start your answer by giving, or at the end of your answer, you can write a small line which says, further discussion with our managing director, Joseph Waller, on this particular situation will help because he is an expert in digital technologies, or he is an expert, or he's somebody who is rooting for future expansion. So see how I'm including the pre-scene as part of my mock answers, and that really adds value to something that is being presented to the examiner. It really integrates your answer well. So knowing what each director is good at, what's his competency, what's his skill, what does he want to do, can add really good advantages to your answer writing. So keep these ideas in mind that we are giving you. And as you can see, at every stage, we try to make your learning simple. We try to give you informative tips that you can remember in an easy way because of the diagrammatic representation that you see. So, about Joseph, he's well experienced to carry out the job. He previously worked with a competitor, so knows the day to day of the business. He knows everything and has worked his way up, so is also bound to have good market and external knowledge, which could prove to be very beneficial. Somebody who's setting the company's strategy, who's responsible for the strategy, needs to have this very good background. We have that in place, so that's an advantage for Accelerate. His interest in setting up future expansion and digital technologies can be a big boost and a positive sign for our business. Next, we have the finance director, which is Megan Dubois. So, Megan is a CIMA qualified accountant. Megan was appointed as finance director last year and has quickly earned a reputation for keeping a tight rein on the company's finances. She is interested in exploring the use of digital technology to make finance more easier and efficient. So again, Megan is well educated and qualified to carry out the role. She's an expert. She has a reputation to keep expenses in control. And this is something that would have really helped us to survive the worst of the recession and still stay afloat. She's an important person for the business. Her interest in integrating digital technology into the finance process gives us a competitive advantage, as this can help better the company's financial system. And she is happy to accept digital technology, happy to accept the disruptive nature of technology, which is good in this modern business environment. Same way, we have the IT director, which is Gavin Hoffman. So Gavin graduated with a master's degree in computer science from Everland University. He has been pivotal in the development of the company's fleet management system, which is seen as groundbreaking in its use of digital technology. So Gavin has created a fleet management system which is a competitive advantage for any car rental service, and it's groundbreaking, so it's good for our business, right? It's one of our competitive advantages. So he's again a well-educated director. He has been at the helm of fleet management system, which has proven to be groundbreaking in its use of digital technology. His skill and role is vital for us. Having a specific IT director is very important. Next, we have a marketing director called Jessica Strauss. So Jessica joined the company in 2010 after previously working as a marketing executive for a retailing company. So she already has good marketing experience. She's keen to exploit social media marketing both to gain market intelligence and to promote the brand. So she has worked extensively in the selling industry, in the marketing industry. So her knowledge will come in handy for us. Branding is also being given importance over here. She wants to promote the brand. So, which is definitely a good thing for a business that is a market leader. Leveraging the brand to make sure customers are returning for purchases, returning for our rentals is key for my business. Her interest in social media marketing means we are also focusing on new trends, means we are ready to accept new changes in the industry, and that is also very good. So as you can see, each director's job is broken down. We tell you what he's good at, we make sense of it, we make it relevant, we make it easy, so you can capture these ideas and then explain it better when you have to use it as part of the mock exams. Next, we have a retail operations director who is Jack Durand. So Jack graduated from Everland Universities with a master's degree in sales management. Again, very well educated. Jack works closely with Jessica and is keen to further expand the company's services. He's constantly looking for potential new opportunities to meet customer demand. So again, he's well educated. He's expanding the company's services, which is part of our strategy. And it is good to see that we have someone who is directly trying to fulfill this. One of our strategies was to continuously expand, look at new opportunities. We have Jack, who's specifically focused on this. His constant focus on potential new opportunities gives us the forward looking approach most companies need in this dynamic business environment. Next, we have the human resources director, who is Ben Spiegel. Now, Ben has a wealth of experience in human resource management. Very good, because HR is one of the most important parts of any organization. He believes that the company's employees are its most important asset and that employee development is key to the company's success. So, he's a very well experienced director. His beliefs of employees being an asset for the company and key to the company's success are well founded and very important in today's modern business environment. So overall, the directors have a wide range of previous experience, which we can see mainly in the car rental industry. They are relatively young and highly enthusiastic. So a couple of important points to note over here. They say the directors have a wide range of experience, which is definitely important, definite straight away competitive advantage for my business. They also say that the directors are young and enthusiastic. This means that they will be ready to accept modern business trends like digital technologies, like disruptive technologies, and they will also have a little bit higher risk taking appetite, which can sometimes be positive for the business. So it's very important for directors in our industry, which is fast moving, fast changing, to be accepting of the risk, to be taking a risk, to be okay with new trends, and we have that in place. So that can be seen as our competitive advantage. See again how everything is broken down: clear, specific highlights, clear, specific points being given to you. So, with that, we have come to the end of our pre scene analysis part one. As you can see, it was very informative. It took you through the most important parts of the pre scene word by word. It helped you relate to your E1, P1, and F1 syllabus. If you need more information, you can log on to our website and unlock the part two of your pre scene analysis, which is another hour and a half of explanations with the financial analysis, with the whole set of explanations, which is ready and available for you. So you can write to us, email us, chat with us on our website, and we would be most happy to help you. So hope you found this helpful, and I hope you have understood how detailed you need to understand the company so that you can write well and informed mock answers as we keep moving on. Thank you for being here.